Hi, I am Nayo Carter-Gray, virtual accountant and corny joke enthusiast who has been working with small businesses just like yours maintain their profitability. I've partnered with QuickBooks on this video series to help you run and grow your business. And today we are going to be talking about one of my favorite subjects, small business budgeting. Let's have some fun. What's that you say? You can count on me. Running your own business gives you the exciting opportunity to be your own boss, bring your vision to life, and direct your financial future. But to avoid failing within that first year, you want to be able to create a small business budget. So today we're going to talk about the benefits of creating that budget and how to do so. But before we continue, make sure to give this video a thumbs up and subscribe to the QuickBooks channel for more videos just like this. If you're an avid reader just like me, you can check the description below for a link to an article on this topic. So, what is a business budget? A business budget is an outline of a company's revenues, expenses, and profits over a period of time, typically monthly, quarterly, or annually. A good budget will assign a purpose for every dollar it intends to earn. This business budget will give you insights into where you're spending your money and where you possibly can cut back, which will allow you to be able to make better spending decisions and continuously improve earnings. Business budgets offer several key benefits, including allowing you, the business owner, to run your organization with confidence. It'll also allow you to identify any spending or cash flow issues right away. And then lastly, it will demonstrate to your creditors and investors positive money management. Now that we know what it is and why it's important, let's talk about the steps of actually creating that business budget. Step number 1, calculate all forms of income. Your gross income will allow you to understand exactly how much cash you have on hand to spend. Tracking this income over time will also give you insights into if your revenue is actually growing or if it's stagnant and it's time to change your rates. If you want to see how much money you've brought in over time, just refer to the revenue section of your profit and loss statement. Step number 2, subtract your fixed cost. Once you've calculated your total income, you want to subtract out your fixed expenses. These are the costs that tend to stay consistent over the year. Think payments like rent, mortgage, salaries, things of that nature. You know, those costs that really don't change. Step number 3, subtract out your variable costs. In addition to your fixed costs, you may have variable costs that aren't always the same amount every single month. These costs may be a little harder to predict, but you can refer back to your old invoices and receipts to estimate them. These costs can include things such as material costs, outsourcing costs, and commissions. Step number 4, plan for emergencies and one-time expenses. As a business owner, you may have encountered some unexpected expenses, things like new equipment, new employees, or unplanned emergencies. So let's plan as much as you can by setting aside some cash to prepare for these unplanned events. Step number 5, it's time to draft that business budget. Now that you've reviewed your profit and loss statement and you've calculated your budgeted income and expenses, it's time to draft that business budget. Most companies opt for an annual budget broken down by months, but a good business budget will follow the format of your profit and loss statement, allowing you to track your actuals versus budgeted numbers throughout the year. As you're creating your business budget, you want to keep a few best practices in mind. First, you want to review your financial statements. Look for areas of continuous improvement and refine as necessary. After all, your budget isn't set in stone and is flexible. Next, you want to set goals and kind of avoid wishful thinking. Ultimately, it's better to be a little more conservative with your budget versus expecting the best case scenario. Break down your finances into areas of success and improvement. Replicate that success and continue to look for areas to further improve your business finances. This will lead to more profits in the long run. Building a business budget can feel overwhelming, but in order to maintain financial stability and to move your business forward, it's essential. QuickBooks has tools that allow you to track your expenses, glean insights into your spending patterns, and assess where your business is financially. Check out their product features to learn more. They also have a free Excel template to help you build a budget for your business. Well, that's all the time I have budgeted today. If you like this video, make sure to give it a thumbs up and be sure to subscribe to the QuickBooks channel for more video content like this. All right, calculator.